Yeah, I know, Brad, your mom just got a Tesla, is that right?
Oh, no, well,
a family member?
Still has the, I believe, Model 3.
Okay.
And they just recently checked out the Cybertruck. I believe they drove across state lines to go see.
Oh, wow, okay.
We think Tesla's earnings are going to be flat next year. We think they're going to have to lower expectations around deliveries for next year. And the stock is trading at nearly 100 times our estimate for next year's earnings.
Now the next phase of the Tesla growth story is happening. And I think valuation, these analysts continue to call Tesla just an auto company. That's basically saying, you know, that Steph Curry is just a basketball player.
All that and more. So let's get to it. Tesla stock ended the week at $243.84, up almost 0.5%. In the after hours right now, Tesla is currently in the red. For the week, Tesla is up almost 2%. The month, Tesla is still up over 12%. Going back 90 days, however, Tesla is down 2%. And year to date, Tesla is up over 105%. I didn't get to engage in any zero-day options yesterday, didn't really have any indicators screaming at me, but I still have a couple of calls that will expire next week. My goal with the options is to try to make money whether or not Tesla stock goes up or down, taking advantage of TSLA's extreme volatility. Although there's a method to my madness, I'm not going to say it's up there with calculus or even Pythagorean theorem. It's more like multiplication tables. Nothing of what I'm doing is exotic. I have a few indicators that I look at, and if I'm feeling it, I'll place the bet, and if I'm not, I'll move on.
Turning over to Tesla, turning things around in China. The EV maker seeing vehicle sales rise 5% year over year in November. The uptick comes after 2 straight quarters of declining sales in the country. That's according to data from China's Passenger Car Association via Bloomberg. So what's motivating the upward trend? With us now is Yahoo Finance's Praz Subramanian for more. Praz, what do you got?
Hey, how's it going? So yeah, that's right. 5% jump there in China sales, around to 65,000 units there for the month of November compared to a year ago. This, as Tesla is actually raising prices slightly through the month of October and November here. So they're sort of calibrating where they want to be. Little mini hikes for the cars there. Want to note something though. Total deliveries from Shanghai, from Giga Shanghai, were 82,000, and that's an 18% drop from a year ago. And that's because that's a lot of the front loading of the exports. And so in November and October, so in November, most of it is going to be China actually domestic sales. So that's what that number is this month. That's why it's up, but the overall number is down. And that 5% raise in deliveries is good news for Tesla in China, because that is a very hyper-competitive market with the BYDs and companies like that. They're eating away at their market share.
It looks like Praz is getting it over there, at least a little bit. Tesla's primary export hub is Giga Shanghai. So when you're just talking about registrations in China and then try to use that data to extrapolate what's going on at the Giga Shanghai factory, you have to take into account that most of their vehicles are going to be in transit to the Pacific region. Hell, some of their vehicles even go to Canada. Just like everywhere else in the world, Tesla's presence is ever growing.
This is a company that just came off its Cybertruck event. I mean, region by region, is it clear yet how many people are actually going to take delivery of this vehicle?
The Cybertruck?
Yeah.
It's only U.S. for now.
Okay.
And then probably...
Well, that narrows it down then.
And then eventually Canada. I think eventually Canada. Yeah. And then we'll see. Maybe they will be international response. I mean, I'm sure look at the Google search interest, right? It's insane in terms of, like, I saw a graphic about F-150 Lightning, Rivian, and Tesla Cybertruck Google search across the United States, and it's almost every state is Cybertruck. Wow. A couple Rivian states. So it goes to show you, like, there is interest, maybe good or bad, but the people are interested nonetheless.
Yeah, I know, Brad, your mom just got a Tesla, is that right?
Oh, no, well,
a family member?
Still has the, I believe, Model 3. And they just recently checked out the Cybertruck. I believe they drove across state lines to go see.
Oh, wow, okay.
This is the type of fervor for the Tesla vehicles that just can't fit inside a spreadsheet. Had I not owned a Tesla, I wouldn't understand it either. But the moment I drove the Model 3, there was no going back. Very reminiscent to when I had my first smartphone. Why the would I go back?
Okay, so that is an example, and my mom recently told me she wants to get a Tesla now so that by the time she's aging, she doesn't have to worry about not understanding how an EV works when she switches. Is that a growing market for the EV space? Is there potential that that could be an untapped demographic, some of the older individuals who might be able to become new customers for Tesla?
Yeah, I think so. I mean, look, we're only approaching 10% market share for overall sales this year, right? We're not there yet. We're approaching it. So there's 90% of people that are car buyers that are interested or potentially could be your market for EVs. And a lot of those buyers are like people like your mom or I mean, Brad's mom is an early adopter, right? She drove across state lines to see this Cybertruck.
My parents are way cooler than me.
Yeah.
So these Anchor's family members, they've felt the difference. Older customers are headed to Tesla showrooms just to see what all the hubbub's about, maybe get ahead of the transition, and finding out, holy smokes, these things cost how much? I can afford that. These things look pretty good inside. Oh yeah, sign me up. Electric vehicles are the future, but Teslas are something else entirely.
I think there's a definitely mix up. My parents are interested in EVs and they don't have one yet. So I think there's a huge kind of potential market there. The demand may be slow to come by potentially as we see, prices come down, that could help. But I just read a report today about how the residual values on EVs are really bad and that's hurting interest. So if are you gonna want to buy an EV if you know that it's gonna be worth half as much in 3 years, whereas a gas car might be worth 3/4. So I think that's sort of the problem there is how do you address that residual value market? And your mom might be like, hey, you know what? Maybe I'll stay with my Prius or something like that.
All right, this is what I want to tell you about the value of your electric vehicle. If you're not talking about a Tesla, all bets are off. Resale value of your vehicle is wholly indicative on supply and demand. If you're not talking about a Tesla, demand is, sure, people want Rivians, Lucids, or whatever else is out there, but not to the level of Tesla. Then you have to look at the other portion of the equation, which is the supply. How many Teslas are being pushed out by factories? The Model Y and the Model 3 have the highest volume of any of Tesla's lineup. If you can get a brand new Tesla within reasonable wait times, you're going to want to opt to buy the new one. That's just reasonable. But imagine if the demand is so high that wait times exceed the production level of what Tesla can do, the prices will again skyrocket. We're at the bottom of this S-curve. We have no idea when demand is going to be like, give me all of those, please, soaking up all of Tesla's current production capabilities. The used Tesla market is directly linked to the supply and demand of Tesla's new vehicles. And as you can see, the demand for Tesla vehicles is not slowing, it's indeed growing.
Our first guest this hour says that his best idea for the new year is an underweight position in Tesla. He sees delivery and revenue estimates for 2024 and 2025 coming down materially, he says. And it's also a warning of growth, a narrative around the company that he believes could weigh on the multiple. Joining us right now is Bernstein senior research analyst Tony Sacconaghi. You have been negative on Tesla, but now it sounds like you're more negative.
Look, I think the backdrop is important here, both the market and for Tesla. So the Magnificent Seven have had an incredible year, as everyone knows. And I think there will be scrutiny on these names as we begin next year and people level set and say, where do we go from here? And we think Tesla's earnings are going to be flat next year. We think they're going to have to lower expectations around deliveries for next year. And the stock is trading at nearly 100 times our estimate for next year's earnings.
I'm going to tell you right now, Tony, that Q4 is going to be a record-breaking quarter for Tesla. Tesla will sell every single car that they make, and they are not slowing down production. It may have looked like that with Q3, but those were expected downtimes for the factories. I can't wait for Q4 to come out and put this nonsense to bed. And this is just speaking on Tesla's vehicle business. Tesla is doing way more than just selling automobiles. This is a software company. This is a battery company. This is a supercharging company. Even if you ignore all the various aspects of Tesla's business besides automobiles, did you forget, Tony, that the Model Y is the best-selling vehicle on the planet for 2023? What more do you need? This isn't a $20,000 Corolla. What do you think happens when Tesla unveils their next generation vehicle? But some people got to learn the hard way.
Let's just talk about the growth piece of it, because I understand the margin compression piece of it. But I'm curious sort of what you think about the growth piece of it and the idea, if you believe, and look, it's been a long time, you need the breakthrough to happen. if you believe the sort of self-driving car narrative, if you believe some of the tech narrative, does that change any of these dynamics?
Clearly, if Tesla was able to deliver and regulators were able to accept full self-driving, a year from now, that adds potentially $10,000 plus in profit per car, and that dramatically changes the economics. I think our belief is that it's difficult to know when full self-driving will kick in, but we think it's years and likely multiple years, not only from a technology perspective, but perhaps more importantly from a regulatory perspective.
I don't know when the FSD light bulb will kick in, but from a regulatory perspective, numbers don't lie. And Tesla's been accumulating numbers all the live long day. It won't be hard for them to prove that with the software engaged, lives will be saved, and regulators will tip their hat and give their blessing wholeheartedly.
We think that over time, full self-driving will become democratized, that there are lots of really big companies investing lots of money in full self-driving. And so Tesla may very well get there first and may be able to command higher prices for a few years. But ultimately, like everything in the auto industry, competition drives down pricing. So that $10,000 per car, if Tesla's able to capture that 3-5 years from now, that could be $1,000 or $2,000 per car 5 years after that.
Right.
Artificial intelligence is not a part of the automobile industry. That is not how that works. Proprietized data is king. There's a reason why Google's a verb. Why do we use Google over any other search engine? It's because they have the proprietary data set that makes their software unrivaled. This is not the same thing as a carburetor. He's getting me hot a little bit. The moat for FSD will be even greater because instead of just Googling something, it'll be saving lives. You're not going to want to risk being in a vehicle with a subpar autonomous software. Shout out to Waymo. Shout out to Cruise. Limited and less safe. Doesn't sound like a recipe for success. I'd like to say there's some good points from Tony there, but there really isn't.
All right, let's talk about another specific company. I guess not related to AI, but everything is sort of related to AI now. Talk about Tesla, okay? Because tech analyst Tony Sacconaghi, great guy, probably your friend of this network, calling Tesla his best idea for 2024. However, he's calling shorting Tesla his best idea. In other words, betting Tesla stock falls. Tony joined CNBC earlier today.
We think Tesla's earnings are going to be flat next year.
They're not.
We think they're going to have to lower expectations around deliveries for next year.
They won't.
And the stock is trading at nearly 100 times our estimate for next year's earnings.
And that's because you're still underestimating Tesla's growth potential.
Now, the short call follows what could be described as a bad week for Tesla in Europe. You got a union in Finland joining several Nordic unions and striking in Tesla over a collective bargaining deal. One of Denmark's largest pension funds announcing plans to sell Tesla stock over the dispute.
And that's the dumbest thing you could do for your retirement. But hey, you do you, boo-boo. You do you.
The stock basically doubling already this year, Dan. I mean, I'm not going to say blame the Danes, but, listen, Teslas are huge in those countries because gasoline is like $10 a gallon, even though they all get rich in Norway pumping out oil. What's your take on the call, and should people sell Tesla?
Look, I mean, the bears, it's been a brutal year for the bears. And, and obviously, Tony does great work, but I think what's not in the spreadsheets is what basically is the transformation that's happening in the auto industry. Tesla is leading it.
Ding, 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 ding. Tell him what he's won, Johnny. Your mother. Right. Everybody's going electric. And the only company that's making any significant money making this powertrain is Tesla. Everybody thought the legacy auto manufacturers would be able to catch them by 2025. They're slowly but surely finding out that this is harder than Tesla makes it look.
Now, the next phase of the Tesla growth story is happening. And I think valuation, these analysts continue to call Tesla just an auto company. That's basically saying, that Steph Curry is just a basketball player.
Why?
Because you look at it's disruptive tech. And I think you're starting to now see whether it comes to supercharger, whether it comes to battery technology, whether it comes to full self-driving. And I would argue this could be one of the purest play AI names out there. That's why the stock looks like Rock of Gibraltar going into 24, despite numbers that have come down. I view it as an air pocket.
I do like the Steph Curry analogy. Probably gonna steal that. Anyway, there are companies all over the world making EVs, and they're probably making them pretty well from an automotive standpoint. I mean, the battery technology probably isn't as good as Tesla's. The software is probably not as good as Tesla's, but I'm sure they've got comparable wheels, windows. Who am I kidding? Tesla across the board is better than anything out there, and it shows. The Model Y is the best-selling vehicle on the planet right now. And that's not by coincidence. We have now entered an age of computers on wheels. You would like to think legacy automotive has an edge in manufacturing. Consider Tesla's only been doing this for around 20 years. But that's not the case. Tesla is running circles around them in the manufacturing department, on top of having world-class software in their vehicles. You can get an electric vehicle anywhere, but if you want the most efficient, the most powerful, the most functional EV, you're probably going to want the best product for the amount of money that you're spending. And that's just a Tesla.
Is Elon Musk an exogenous risk to the company? It's his company. He founded it. He built it. But he's in the news a lot lately for a lot of the reasons people would say are not good. Does he hurt Tesla at some point?
No.
Elon Musk is the biggest asset to Tesla. And even though there's
even now,
and ultimately he is the hearts and lungs of Tesla. And I think if you look at it, that's really more what investors have almost bet on. And that's why Tesla, it continues to really be their world. Everyone else is paying rent in terms of electric vehicles because of what Musk has built and that ecosystem that I think the bears continue to underestimate. This is a historical, generational company that's only in the second inning of this market.
Well, I couldn't have said it better myself. The only thing that I believe is that we're not in the second inning. It may look like we're in the second inning because Tesla's so far ahead, but trust me, my still warming up. In conclusion, surprise, surprise, Tesla China sales are up 5% year over year at this point? Imagine that. Bernstein's Tony Sacconaghi doesn't believe Tesla will see their 52-week high anytime soon. As a matter of fact, he's got a price target of $150. Short sellers beware when you take this advice. The financial fallout could be nuclear. That's all I've got for you today. Be easy. Bird.